Hey everyone, welcome back to Corporate Decoder, the place where we decode those confusing corporate filings. This time we're digging into Iradimed Corporation's latest report. And let's just say it seems like they're quietly humming along, making some interesting plays in their FICOR 3. Dive in if you love getting these clear. What a fantastic community forming on Discord, linked in the description below, so join us there for more insights. Alright, let's cut to the chase. Iradimed is in the business of making medical devices that can safely work around MRI machines. Think MRI-compatible IV infusion pumps and patient vital signs monitors. It's a niche, but a crucial one, especially for keeping vulnerable patients safe during these powerful imaging scans. Looking at their financials, they've posted a solid revenue of $73.2 million for the year ended December 31, 12% from 2023. This growth seems to be driven quite a bit by their domestic market, with US sales making up about 83% of their total revenue. That's a slight increase from the previous year, showing their home turf is strong. When we break down where that revenue comes from, devices are the big kahuna, bringing in $51.9 million. Within that, their MRI-compatible IV infusion pump systems are a significant player, accounting for over $26 million in sales. Their vital signs monitoring systems also contribute substantially with a little over $24 million. It seems like they're selling more of these devices, which intuitively means they're also selling more of the disposable tubing and services that go with them, as seen in that disposable services and other revenue category, which grew to nearly $19.1 million. And now what's really interesting here is their gross profit margin, which is a sky-high 76.9%. This means that for every dollar of revenue they earn, more than 76 cents are left after paying for the direct costs of making their products. That's exceptional, and speaks to potentially strong pricing power or very efficient manufacturing. This margin has actually improved slightly from the previous year. However, to achieve this revenue growth, they've also been investing more in sales and marketing. These expenses jumped by a notable 28.6%. This makes sense if they're expanding their sales team, as mentioned, to push for more adoption of their specialized products. More sales reps means more commissions, more travel, and generally higher sales-related costs. On the administrative side, things grew by about 54%, which they attribute to higher legal, consulting, and payroll costs. Growing a business, especially one in a regulated field like medical devices, often means more expenses in these areas. So what does all this mean for the bottom line? Their net income for 2024 was over $19 million. This is a solid 12% increase from 2023. Aligning nicely with their revenue growth, it shows they're not just selling more, they're also managing their costs effectively to translate that into profit. Now, a little bit about their physical footprint. They operate from a single facility in Florida. This reliance on one location is a bit of a risk. If something were to happen there, like a natural disaster, it could really disrupt their operations. They are building a new, larger facility though, which is a good sign of expansion, but also means significant capital investment is going into that. An interesting point they bring up is some related party transactions, particularly with an entity controlled by their CEO. While they mention the new facility will reduce this exposure, it's something to keep an eye on, as it can sometimes introduce conflicts of interest. Speaking of risks, they are certainly aware of the challenges of operating internationally, which accounts for about 17% of their revenue. Things like currency fluctuations, different regulations, and managing foreign distributors are always on the radar. The biggest overarching risk for any medical device company is competition and technological change. Iradimed is in a specialized market, but they acknowledge that new competitors, advancements in MRI technology itself, or even the emergence of entirely new imaging methods could make their current products less valuable. It's also worth noting some corporate governance points. Their corporate structure and Delaware's laws have clauses that could make it harder for someone to acquire the company, or for shareholders to easily push for management changes. This is common, but it does shape the landscape for potential takeovers and shareholder activism. Let's quickly look at the balance sheet. As of December 31, 2024, they had over $52 million in cash and investments. That's a strong position, giving them a good cushion for operations and future growth. Their total assets grew largely due to an increase in property and equipment, which is likely tied to that new facility construction. Crucially, their equity position also strengthened, reflecting their profitability. On the employee side, they have stock options and restricted stock units as incentives. For the year, they recognized over $2.5 million in stock-based compensation. Their auditor RSM USLT has given a clean bill of health, stating the financial statements present fairly in all material respects. One critical audit matter they highlighted was the completeness and accuracy of how Iradimed calculates deferred revenue from extended warranty agreements. This is a complex area, but the auditor's procedures seem to have confirmed management's approach. So what's the takeaway here? Iradimed is operating in a growing, albeit niche, market. They have a strong revenue stream and impressive profit margins, indicating good operational efficiency and market position, especially in their core product lines. The investment in sales and marketing alongside R&D signals a focus on future growth. The reliance on a single manufacturing facility and certain related party transactions are points of caution, but the construction of a new facility aims to address some of these. Overall, they appear to be a financially healthy company, strategically positioned in a critical segment of the medical device industry. Their ability to maintain these high margins and continue driving sales of their specialized safety-focused products will be key to their continued success. What are your thoughts on Iradimed's performance and strategy? Do those high gross margins make you optimistic, or do the risks outweigh the rewards? Let me know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more insights into the world of corporate finance. And don't forget to join our Discord community. Thanks for watching, and I'll see you in the next video.